down 82% in 2022. Is Roku stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at is Roku's quarterly revenue growth year over year. And when you look at this going back to 2018, you can see why Roku's valuation reached such high levels, right? You look at its revenue growth, not only was the company growing robustly at over 25% and then 50%, but this revenue growth was actually accelerating, going higher. So it was growing, but growing at a faster rate. And investors love this kind of growth from a company when it's not only growing fast, but that rate of growth is accelerating. That's why investors fell in love with Roku stock and bid it up to such incredible valuations at the height of the pandemic. But as economies reopened and inflation started pinching consumer budgets, and they stopped purchasing so many Roku players and widescreen, big screen TVs. That started to hurt Roku's revenue growth, and it only grew at 11, let's say 12% in its most recent quarter, way below its growth of above 75% at the peak, and also way below any quarterly growth rate going back before 2018. And so you can understand why Roku's stock price had such a big fall, over 82%, because it was investors love the accelerating growth and they really hate this crash of growth immediately down to 12%. The next thing I want to look at is Roku's operating income. Looking back at the years before the pandemic, even though the company was growing so quickly, you didn't really see increasing operating income. You actually saw decreasing operating income. You see a downward trend and negative operating income for many quarters. And then during the boom quarters of a few quarters in late 2020 and most all of 2021, it did generate very good operating income. And that was another reason investors got really enthusiastic about Roku stock was in 2021. Not only was it an accelerating revenue growth story, but it was also expanding profitability very rapidly. And so that was the 1-2 punch that really got investors into Roku stock. But most recently, several quarters in a row of negative operating income, and it's falling precipitously with no end in sight. The management has chosen to insulate consumers from the rising cost of its players, and so it's absorbing the higher cost and taking losses in its player segment rather than raising prices on its customers to try and attract more customers to try and get more account growth, which it is working. They are getting a lot more accounts. They recently reported that they surpassed 70 million active accounts, and they're willing to do that because the player segment is not profitable, but its platform segment is extremely profitable. That's where Roku makes money off of what people do while on the Roku platform. Every time you get shown an advertisement, Roku gets a piece. Every time you sign up to a subscription, Roku gets a piece. Every time you rent or buy a movie while you're on the Roku platform, Roku gets a piece. And so that's a lucrative business that it's willing to take a loss to get you onto that platform so that it can then continue making money from you in hopes of several quarters and several years of lucrative profit growth. Next, let's look at Roku's cash flow from operations, and we see a very nice upward trend up until recently, where the falling, crashing revenue growth caused cash flow from operations to turn negative for 2 quarters out of the last 5 or so. But it recently turned positive again, 14 million in cash flow from operations. Very volatile, and this is likely to get even more volatile in the over the next few quarters and years, because Roku just announced it's going to get into manufacturing TVs. So Roku's going to sell its own TVs now, whereas previously it was partnering with other manufacturers and licensing their platform to other manufacturers. Now it's not going to be just Roku enabled TVs that you're going to be able to buy. You're going to be able to actually buy Roku TVs. It's not going to need to be a Sony TV that happens to be on a Roku platform, or a Hisense TV that's on a Roku platform. No, you're going to be able to buy Roku manufactured TVs, and this is going to be costly for them to put up the investment to get the manufacturing up and running. It's going to take a lot of upfront cash investment and cash investment in inventories. And so you're going to see some fluctuations in the near term, although longer term, this move could potentially help with profitability, although that remains to be seen. It's early, it just made the announcement, and so it remains to be seen. What it did do is now it made the stock riskier. And so let's look at its valuation. Roku is trading at a price to sales of 1.9. This is the lowest it has traded for in its history. Used to trade for over 30 price to sales ratio. That was when everything was working in its favor. Revenue growth was accelerating. Operating income was exploding. And so you can understand why it reached those levels. Investors were very enthusiastic. Now at a price to sales of 1.9, I'm not even going to recommend investors to buy this stock for 2023. The risks are too high. The near-term headwinds are persisting well into the at least the first half of 2023. So to answer the question, is Roku stock a buy for 2023? I'm going to say no, it's not. It's not yet a buy for 2023. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.